Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and this week's contract tip has to deal with handling an insurance claim on a property that comes across immediately prior to a closing. So consider the issue that a buyer is getting ready to close on a property and the seller has just experienced storm damage on the roof. The seller went ahead and made a claim against their homeowner's insurance policy to take care of the roof damage from the storm. The existing seller's insurance company has agreed to take care of it. They are giving partial payment to a roofing company or to the seller at this point now, and the final payment will come across when the work has been completed. So all great and wonderful on the seller's behalf, but let's consider what to do if you represent the buyer. So a couple of questions you need to consider and address in your contract. Number one, what type of loan is the buyer getting? If the buyer is getting an FHA loan or a VA loan, then the lender needs to determine, does that work need to be completed prior to closing? If so, and the transaction is scheduled to close imminently prior to the work being completed, how do you address that between the parties? If that is the case, and let's say the buyer has a rate lock on the loan, what do you do regarding extension if it's a conventional loan and the work doesn't necessarily have to be completed prior to closing? How do you handle that issue between the buyer and the seller? Well, there are a lot of other issues to consider and to address in your contract that the buyer and the seller need to address between each other. So a couple things. Number one, working with the buyer, absolutely you need to check with the lender regarding the entire situation, the damage to the roof, the fact that the existing insurance company is going to cover it. However, it may not be completely addressed, repaired, or even paid for prior to closing. So definitely you need to address that with the lender. Make sure that you still can close if it's a conventional loan or whatever loan with that in play. Then the second thing is, if you are a buyer's agent, if you're a buyer, you definitely need to get in touch with the listing agent to determine how all of these negotiations have happened with their existing insurance company. Does the seller have something in writing from the insurance company regarding payment? And if the insurance company is making partial payment, well, where is the first half of that payment going? Is it going directly to the seller, or is it going to the vendor, the roofing company that's going to repair the roof? If it goes directly to the seller and the seller closes on the property and it's no longer their property, you need to account for contractually somehow that seller still paying that vendor to take care of the roofing repairs. Second thing is, with the insurance company, if the property closes and the ownership of that property changes hands, number one, and number two, the buyer has their own insurance company, hazard insurance, you need to make sure that the seller's existing insurance company who handled or who received the claim on the roof while the seller owned it, you need to make sure that if the work is not complete or if the payment for the work has not been completed, you need to make sure that that existing hazard insurance company is still going to complete the work on that property, even though their client doesn't own the property anymore. Are they obligated to? That's a question that needs to be addressed between the buyer and the seller. And it could be, is it a question of the insurance company paying the vendor directly? Is the insurance company paying the seller and the seller going to give the money to the new buyer to handle those issues? How does that all get addressed? And another issue is, could it be that the seller assigns their insurance rights regarding that repair to the buyer at closing? A lot of things to address regarding the buyer's rate lock with the lender. If the buyer does have to delay closing and they're going to lose out on their rate lock, a couple of things for the buyer to address with the lender. what are the prevailing rates right now, and what are they likely to be within the near future, depending on when this transaction can close. Is the, if you do have to delay closing to address these issues, are the rates, for example, going to be appreciably more than they are when the buyer locked the rate? If that is the case, and the buyer is going to have to pay, if the delay is going to have to happen, then maybe whatever the difference in the rate lock is, perhaps that could be negotiated between the buyer and the seller for the seller to pay for a buy down in the rate. Lots and lots of issues to address, and especially as we are hit with storms, whether it be hail damage or wind damage or any type of damage, regardless if it's from a storm or not. But basically, if you are in the middle of a transaction, a property is under contract, and there is damage to the house where the seller does make a claim against their existing insurance company, and this claim is not going to be completely addressed or handled prior to closing, then these are many of the types of issues that need to be addressed contractually. Remember a couple things. Number one, buyer needs to check with their lender regarding how to handle this and regarding closing date. Number two, definitely need to check with the hazard insurance company, both the seller's hazard insurance company and the buyer's hazard insurance company, because with a claim now being on the house, this also could possibly affect the new buyer's homeowner's insurance rate on the insurance that they are required to get if they have a loan on the property. So that's another issue to consider. The other thing is just protecting both clients, buyer and seller, regarding this repair work getting done, especially the buyer, making sure that whatever deals or agreements between the existing seller and their current hazard insurance company, whatever agreements there are in place, are those still going to stay intact with a new owner of the property? Again, lots of issues to address with hazard insurance companies, lenders, buyer, seller, so forth and so on. Whatever provisions do get agreed upon between the buyer and the seller, especially in this situation, if these issues are going to continue after closing, remember to use those magic words. And if you've ever been in any of my contract classes, you have definitely heard me address the magic words. And those magic words are, this provision shall survive closing. This provision shall survive closing. That way, if these issues do have to be carried on and addressed after the property is closed, the parties are still responsible for each one of their responsibilities with regard to whatever is negotiated in a contract, in an amendment. Those provisions will survive closing, and the parties are still obligated to fulfill their duties even after the transaction has closed. So hopefully this contract tip helped. Hopefully you're never in that situation. Thank you so much for watching. And again, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.